Tuesday, August 15th. Market analysis, Stan Ehrlich. A little late this morning, 10:40 California time. Normally I start about an hour earlier than this. And I will start with the stock market indexes like I always do. And that would be the S&P 500 Spider SPY, which is down 4 points in small change at the lows of this break so far. Now, it is my opinion that we are very, very close to turning back up again and challenging the rally highs we've seen so far on July 27th, when we caught the top of the market with a bearish engulfing ER sell signal. We're at support. We're almost oversold. We're at a bull trend line, or very close. So there's a chance that we could make a little bit lower low. The spider has not quite finished closing a gap, and we need to come down and touch 442.97 to officially close the gap. 443 would do the job, but the low 2 days ago was 443.35. So it left 37 ticks worth of gap. So on the spider, there's still a chance it'll come down to that 442. 3 level, finish closing the gap and turn back up again. And I am expecting that to happen very soon, frankly, this week. All right. And that'll be another wave up. Now, the DIA has closed the gap several days ago, is challenging the support level, which it rallied a little bit out of a few days ago. It is not particularly close to oversold at all. So in the case of the DIA, there is a chance that it could come down to support levels and an old bull trend line and get down to 346-ish. But I think the market is going to hang in here and start to turn back up. But if I looked only at the DIA, I would say there's a little more elbow room on the downside. Next, QQQ is almost at support, almost came very, very close to getting oversold, only a point away, and started to rally yesterday, not quite having a bullish engulfing, but one tick higher than the previous day's low was yesterday's low. So it did not equal or get below the previous day. No bullish engulfing. Today, we're back into around the middle of the range of yesterday. Again, my opinion is we're extremely close. We may have seen a day or two or a few days ago the lows already, and it's just not obviously proving it by rallying and staying up and getting stronger, etc. Last one is the Russell 2000, because it is, in fact, oversold, and I pulled up the 1 minute chart by accident, sorry. The daily data chart is definitely oversold for the second day in a row, has come down and gotten down into slightly into a zone or area of support, and is a prime target for a green bullish engulfing buy signal, which would be great. Haven't got it yet. Need to be a little bit more patient maybe in order to get what I want. And at the moment, all of the 1 minute charts here and here and here are challenging support, coming down fairly close to the low of the day. And that even includes the Russell. The one that's hanging in there a little bit higher is the Qs momentarily. So that's it. I think we're about to turn back up in the indexes. I think we're about to have a rally to go back up and close some gaps that are above the market in a couple of cases, the Qs and the spider. And if we start to rally, I'll talk about those gaps. But basically setting ourselves up for some sort of a significant rally high in September. And then we'll talk about the October lows coming up in a month and a half, or about 2 months on the average. Futures. We made a minor new low in the bonds into a support area the second time in the last week and a fraction. We did have a bullish engulfing. It did not rally as much as I would have liked and last as long as I would have liked. So we have a minor new low again. But my opinion is the market is about to turn up in bonds and about to at least challenge 123.5, if not 124 and higher. And this could, I think, happen in the next few days, very quickly. We are attempting to bounce off the support again. This, if I'm right, could cause a huge broad double bottom all the way from last October to this year's August, 10 months. So this is a chart that I believe is in the beginning stages of the final low of a major bottom with another bull market for a long many months and years to come. So let's see how this acts in the next days and weeks and months. But I think we're very, very close to a major turn here. Other futures. Spider. Well, I'll start out with the silver. I don't want to. I got on the wrong one. Pardon me, all the hell. And the E-mini did provide 3 sell signals at the top. One of them is the high day, July 27th on the E-mini. And this is a perpetual or continuation contract, not the September per se, but the September did the same thing. We are challenging the lows since then at a bull trend line, which is also the bottom of an upward slanting channel and a prime area for the market to stop going down and turn up. Now, we are having an engulfing day today, but it is a bearish engulfing. Normally, that implies the market would be heading down from here. We already went down. We're at support. We're at a bull trend line. And we're almost oversold. All the conditions to have a turn back up. So, a outside down day or a bearish engulfing under these conditions could end up being what I like to refer to as a bass backwards engulfing. Looks bearish, but it is actually maybe bullish. I don't see very many of these. They're fairly rare. Next chart. We're oversold second day in a row. We dropped a little bit below a support area, and I'm thinking the silver market is about to turn back up again. It might even get as high as 25 again, although I'm thinking 24 would do the job, a very nice rally in the meantime. But we're at support. We are almost having a bullish engulfing, but if we can get higher than yesterday's high, which is not very far away, it'll turn green and I will have an official buy signal, and it'll be the second one in 4 days. If we can do that, which I'd love. We'll find out later. Next, platinum. New low, but it's not staying in new low ground. That is called a washout. Now, if the market can still hold here or rally a little bit more, this could be a low. We were oversold. We do have divergences, and it is trying to come back. So I'm thinking we're looking at maybe a low here. Maybe a little premature to jump on board the long side, but I certainly would be looking in that direction. If we close below all these other previous lows, that story is defunct, and I'll have to flip back to being bearish. But this is classical turning type of price action so far. Next, high-grade copper. Now, an outside down day, bearish engulfing, oversold conditions. All we have to do is to close higher. Does not look likely because we're so far down and already mostly through the day. We're at some support, not the greatest. I'm going to hold back a screaming blood or murder buy it comment, but I think we're very close to turning around and starting to rally. Next, Soybeans. We have a bullish engulfing a few days ago, did not work, but we've got a major support area that is holding so far. I don't like the fact that we have an outside down day. That normally means you're going to start heading lower. And if we start to close below 1282, we could really slide quite a bit, maybe all the way down to 11. This soybean price range does represent a very substantial long-term support area that we are trying to bounce out of for the last several days. Not particularly successfully so far. So I want to see a close somewhere in the neighborhood of 1339.40. In other words, a minor new high and close in order to feel a lot more confident that this support area did, in fact, create a low of significance. So far, yes, but I don't like this bearish engulfing today. That's not really a good sign. So let's see if it can pop back up again. If I was long, I'd be tightening my stops up somewhat. Next, got soybean oil. Okay, now it's time to mention the head and shoulder top. The shoulders, if today is the last shoulder, are about the same price levels. Classic. The high is approximately in the middle of the time frame between the two shoulders. Classic. The neckline would be almost flat, downward slanted slightly. I haven't drawn the neckline in yet. Let's do that right now. And it just takes a few seconds, drawing trend line and start from the lowest low after the first shoulder and the lowest low before the last shoulder high. We have to stop rallying. It has to go sideways a day or two, or maybe this is it, only one day. We have to start going down. It can't go sideways anymore. I'll allow another day or two. It can't go up much more. I'll allow a little bit, and that might mean 63, maybe 63.50. What I'd love to see is obviously a move down ASAP and breaking this neckline. I will draw in the arch marks for the shoulders and the head and the shoulder. I'll draw in a minimum downside objective, which I can tell you right now is in the ballpark of 51. And we'll see how this hypothetical, not finished yet, I'm premature, maybe head and shoulder top pans out. Next, soybean meal. Not quite the same. It's already starting to break down. We're making new lows now for a month and a half. And as you know, I talked about it rallying into resistance. It did stop the rallies. We got overbought. What can I say? I'm continuing to be bearish on the soybean meal. And the same thing goes for wheat and corn. Corn is now oversold. First time in a while, a month and a half. That means it's a likely prospect to start rallying, but just because you're oversold does not mean you're at the low now. It can get more oversold and maybe for several days. So don't jump the gun. I'm starting to look for buy signals. I haven't got any. We broke support and we stayed below it. It looks like today in particular. And we could easily challenge the low back in July of last year, and that would be 453-ish. So down from 67, that's not bad. A little bit more of a break would not surprise me, but we're not, in my opinion, very far from turning back up for a pretty good rally, but it's a bear market. It's not going to be a huge rally. Also, you've got to keep in mind that that low back in July of last year is very big support. If you drop it down a little bit more, you get a bunch of highs in April, July, May, June, July of 21, sorry, the summer of 21. So we are approaching some pretty heavy duty support. I'll draw in that zone there for tomorrow. Next, breaking into new low ground almost in wheat, but now, like some of the other grains, oversold. Makings for a double bottom for the moment, but I don't think it's going to end up a double bottom. I think it's just going to end up being a rally back up to about, I don't know, 765, 740. somewhere in that ballpark, and then turn down. So I don't like selling anything short that's already oversold. That's a big mistake usually. You might get lucky. You might have another few days of real sharp, fast decline. That could happen, but I don't like that kind of trading. Now I'm looking for reasons to tell you that we have a minor double bottom and an attempt to rally up to resistance. Next chart is breaking a bull trend line in live cattle. We got the top of the market recently. We had a retracement, and now I think we're heading toward new low and new low closes. Next, hogs. We already have new lows for a month and a half, closer to 2 months, frankly. And we're approaching some support under the market at that red line, 75-ish. And we're not oversold yet, but getting fairly close. So another couple of hard down days, and we'll be ready to bounce back up again somewhat. I'm bearish. Next, OJ. We caught the top of the market, but lately it's gotten a little stronger than I'd like today in particular, so it has to turn down real quick. This is a bull market. We never broke any major support areas. We never came down any significant percentage. We have not broken anything here that looks like the intermediate to long-term bull market has changed. It hasn't. So maybe that's all we got out of that sell signal, was about a week lower and a pretty good break. Next chart. I'm still bearish in orange juice for the moment, but I'm not liking what today is bringing. We sold the top of the market in cocoa. It had a fantastic break the next day, and now we're recoiling backward. No surprise. I don't think it's going to rally too much more. I do expect it to turn down pretty quickly here. Next, cotton. Double top at resistance. The first high was a bearish ER sell signal. The second one was simply an overbought condition and resistance. And now we're down for the second day in a row and at a little bit of support. I wouldn't call it fantastic, but I think it's going to come down to 83.13. And at that point, we'll see if it can break a double top low between the two highs and have a further break, which would probably bring it back down to, maybe 77-ish, where it was back in late June. Next, I'm still looking for 20 in sugar. Can't help it. It's just moving slowly. A little bit lower yesterday and today. Not too much to say. Next, coffee in a support area at the bottom of the support area and oversold for the second day. This is a prime target for a rally, which should get up to 155 at a minimum. That's not very far up. I'm thinking probably 168. Let's see what happens. I'm going back to bonds, which made a new low, but are hanging in there. At the moment, they're not down too much, and they might even get stronger by the close. I think we're at a bottom or close to it. 10-year notes, same thing on the 10 years. New lows, oversold conditions, but prime target for the beginning of a rally. And crude oil. We got the high of the crude oil 3 days ago, and it's a new low by a large chunk every day since that sell signal. And today looks like a new low close by a substantial amount. Also, I can't help it. New sell signal working perfectly so far. We also sold short on the ER3 only a tick or two above the offer the day after the signal. Perfect. Next, overbought conditions stop the rally at resistance. And we've got 3 days in a row now of down movement in heating oil. I think it's at least going to come back into the support area, hopefully the bottom of it, which would be 2.9 or so, and maybe even lower than that. I did not get any official sell signal at the top here, unfortunately. If we had gotten below the previous day's low, we would have had a bearish red engulfing like we had on August 2nd. That one didn't work. They don't always work as nicely as January 24th of this year, or the high that wasn't the highest high, but November 8th of 22. And you can see where the red and green are on the charts. Next, natural gas, big bearish engulfing today. So this is the very first day we're getting an official sell signal in natural gas. I want to go short at 27.50 for the ER3 in the next 3 days. If we don't make a new low, that'll change the trigger price for a new short. And I'd be looking for at least a move down to approximately 2.3, 2.4, 2.4.5. Next, gold. We've already looked at gold. You guys have a great day. Talk to you tomorrow at around 9:45. Doesn't get published for about a half an hour later than that, but that's when I start.